Hello and welcome to the Trading Zone. Happy lunch hour on this Monday of the first day of the week. We got a big week ahead. This will be the week before the Fed meeting. We're going to have inflation data coming through this week, and there's a lot to go through. And we're getting the week kicked off on a great note. A little bit of a risk on mentality. A lot of the Mag 7 names doing fantastic as we're pumping through this. Actually, Brian, I don't know if you know this, the Mag 7 has taken over the S&P 500 for better returns so far this year. Starting off the year, getting clobbered by the S&P 500. Had a great run lately and is looking very strong. But we're going to get into all that as we get on into the show. We got a trade at the end of the show. Stick around for it. It's going to be a company that I think is right in the middle of the AI boom, and I'm looking past the hardware boom. I'm looking past the semiconductor chips of the AI trade. I'm really looking forward to the implementation of AI. Why are companies buying all these chips? I'm looking for the one company that's really at the center of this evolution.
Yeah, Joe, sorry, I was just finishing up my lunch. Everybody else, you guys can keep eating. That's the purpose of this time slot for us. Eat and listen in and see how we're digesting the market, for lack of a better word. Yeah, I'm Brian Stultland here with Joe Teague, part of Equity Armor Investments. We have our trade ideas this week that we do every week. So make sure you subscribe there if you want up-to-the-date trades as we make changes, not just hear what we have to say at the end of the show. And Joe, you kind of alluded to the fact of one name that we really like. It's a name called Alphabet that we'll get into. So stick around for that, along with some of our other thoughts on the market. And Joe, what do you got for us here to start?
Just to say, I love Alphabet. I love AI. I love the future technology that is coming along here. But that's not to say that that's without risks. We're really due for a little bit of a moment in volatility. It's very possible we can get that this week or next week. We talked about this in like the lead up to the show. If you missed that, real quick, we had a 5-minute or less soundbite on what's going on in volatility. But in a summary, it's been a while since we had a little pop here in VIX. We're absolutely due for one. We're looking at the volatility of the bond index. It's the MOVE index. I think that's going to be really crucial the next couple of weeks with the CPI and the Fed next week. This is showing signs of a bottom, Brian, and we're really watching this 90 area. Very crucial. If we make a higher high here, I think we could see some problems for some equities.
Yeah, just so people know, the MOVE index is the bond volatility index, right? And we've talked about this in the past, how there's a pretty high correlation to where the levels of volatility is, and in opposite of that, where valuations on stocks can go, right? So as we have more certainty, more liquidity in the market, less volatility in bonds, where we see the MOVE index get very low, we find that actually valuations can get a lot higher, regardless of what the interest rate environment is. And so we've seen the MOVE index very low. We've seen valuations of the stock market higher, but obviously those are backward-looking valuations in the stock market. If you look forward and you get this continued boom in the AI play, maybe valuations are about right. But certainly I'm looking at, look, I'm overweight stocks personally, more so than, I would normally be right now. And as I watch kind of this volatility index, the MOVE index, if it were to tick higher, maybe I need to rethink that, because maybe valuations need to go a little bit lower.
Yeah, absolutely. Just think about your hedges if we get here. That's what we'll be watching very closely. It's going to be a leading indicator for the VIX. Another leading indicator we look for in the VIX is the skew. Of course, this measures the difference between the puts in the S&P 500, the 25 delta put compared to the 25 delta call. Anytime these puts get a little bit more expensive compared to these calls, it's a sign volatility is on the rise and in a hurry. This has been in no man's land, just like the VIX index itself here, but we're kind of just getting some higher lows here again and again. We're just kind of winding up this coil, waiting for this next spike here.
Yeah, when you look at this here, we've obviously seen this skew index continue to make higher lows, higher and higher lows all the time. But it looks like, and then, look, as the market keeps moving higher, people are probably looking for some sort of volatility event to the downside, especially now. It's been, in that other chart, what, 6 weeks, 8 weeks, I'm getting like VIX jitters here, because I'm just waiting for this volatility next event to occur. It feels like it's been forever now. But certainly we're watching this, and yeah, that red line, I think we move above that level on the red line here, and there's like extreme put buying, I think there's, could be a trigger that rolls over and goes a lot higher, which would mean volatility moves higher. If we get a sell off in the market, the VIX should scoot up along the line a lot faster.
So yeah, putting it all together, Brian, in the volatility space, you got the VIX futures are now looking something like this. Kind of flat here. This red, just so you know, looking in this red area is the front month here. Is the current environment. Sorry, with September right here being the front month, and this is the current spot VIX. So very interesting to see. It's kind of flatter than normal. Maybe a little complacency, almost say here in this VIX futures side, or maybe just a sign that the futures traders are confident that volatility is going to stay low for September. We're not going to get the September spike, but it seems like complacency to me. I don't know. What's your take?
Yeah, I mean, it's interesting that all like a month ago or 2 months ago, when you look at it, it all looks kind of familiar to each other, which means there hasn't really been a new pattern to dictate volatility. Our models, I would probably be about, half off or so on VIX, not really looking for a spike. So, I mean, at least the futures curve is not saying a spike is coming. And, if you look at mean reversion, there's not, if it were to mean revert, a month or two ago, we were only talking about a point or two higher in the VIX. So, nothing threatening really to me, Joe, that says I really need to own VIX, other than watching that VIX index. Anytime it seems to drop below 15, it's been a buy opportunity, at least for a short-term trade, to own some VIX futures. So I'll be watching that.
I mean, there definitely are a lot of traders of the, SHV, UVXY type of thing. And so you see this, like, this was last week where we had the VIX was actually below where it is now, but this front future was like way higher here. And just in a week, you see a big drop in the future, not so much of a drop in where the cash is, or actually a little bit of a raise in where the cash is. So it seems kind of like maybe these traders are a little bit ahead of themselves, just really, happily collecting this decay here. It seems like a spot where it could be caught off sides. That said, for traders like us who pay attention to that, this steep curve here, and I'm looking out here in these back months, maybe it's just a time to just reevaluate here. Hey, maybe the upside potential is there in the front month. Just something we're watching always, of course.
Yeah.
But anyways, seems like the Fed has been the story. We've talked about that already. Has this equity market already been saved by the Fed? The Fed cuts have been priced in. We're definitely getting a cut next week. Are we going to price in? How many more cuts are we going to price in this year? How many more cuts are we going to price in next year? Are we going to zero? Is inflation going to kick back in and say, hey, we can't go to zero? Well, maybe if the president gets his Fed board, maybe the rates can go to zero. If the president gets his data collectors in there, that maybe inflation can stay at zero. So maybe it's a rigged market and we're just going to be going higher, Ryan. I say this tongue in cheek. This is very sarcastic.
Yeah. Well, I mean, look, inflation hasn't gotten down below the 2% target, which normally would be an indication of cutting rates. But I will say, look, a VIX in the teens probably means there's a lot of liquidity in the market, honestly, Joe. Like, so, I don't know, rate cut when the VIX is at 15 seems kind of abnormal, but it looks like we're going to get it. So maybe that makes the market go higher, and the worst September month doesn't come to fruition. We'll see. Yeah,
well, we'd love to see good inflation data this week. It's on tap here. If we get good inflation data, maybe the market can price in even more Fed cuts and allow the Fed to just put some liquidity into the marketplace. I think everyone would love that. And of course, if there is inflation, it's going to show up in asset prices too, Brian. The stock market's going to go higher if there is inflation. So that's not the worst thing in the world for people who are long equities in their investment portfolio.
Yeah, that's why I'm overweight right now. I think you bring up the SPX chart here, the S&P. So this Friday is the normal expiration, the quarterly expiration in September, where the S&P would cash settle for traders owning S&P futures. And what tends to happen is you look at big round strikes, and the market tends to sort of magnetize to a big strike number in the options market as market makers reposition their calls and puts to what they would have to cash settle into the markets. And so 6,500 is a big number. To me, that probably acts as a magnet for the market here headed into expiration Friday. But on the flip side, when we've gotten good CPI data, it's pushed the market fairly significantly higher off those numbers the last, call it, 2-3 years. So those are two things really to kind of watch as you kind of head into the week in position. I'd probably be short a straddle, but just watch out for the day of the CPI number to see how the market moves there. Yeah. But certainly 6,500 may act as like sort of decay on options.
64.98 is the current price for the S&P 500. So yeah, we are right there.
Yeah, I'd sell above 6,500, maybe buy below for the next couple of days, and then on the CPI number day, maybe look to reposition and take a position then.
We'll see. For me, it's kind of like when you get these big pin round numbers right at this big quarterly expiration. It's kind of like like a terminal velocity. Like most things are going to stay sucked into that orbit, but if you get like something big, it just gets boom, you're out of the orbit and just pushed away.
Yeah.
So if it's a big CPI, it's a shock number one way or the other. I don't know if there's a shock downside. Yeah, maybe there could be like a shock, like surprise good inflation number could push us higher. I absolutely do think so. But if it's right on the money where the market's expecting, maybe we get sucked right in. So
yeah,
that's certainly possible here. Just it's going to take something big though to get us out of this gravitational pull of 6,500.
Sure. I mean, I guess the bigger picture, I guess if you look at the run it's made, like down from 5,000, 6,500, right? That's about 1,500 points. You get like sort of a Fibonacci for all you like tech geek, traders out there. I'm an engineer myself. So I look at those levels, 50% retracement would put you 750 points lower, a 61.8% retracement, which is a normal fib retracement there. I don't know, maybe I guess 5,500 or so could be in the cards. 5,500 to 6,000 is really as a massive like carpet shakeout that would probably take the VIX significantly higher, and that skew index would probably bump through that top red thing. So that's something that's like just a ultimate fear potential that could be sitting out there, that there's just there's a big vacuum run from the lows in April to where we are now.
Yeah, but unlikely to happen by expiration.
Right.
but yeah, no, I take your point though. Yeah, there's absolutely a lot of possibilities here. And it's the same. It's really the same, very similar here with the NASDAQ. Just a tremendous run. Of course, gotten through that April bout of volatility, and it's just been off to the races.
Yeah, the NASDAQ certainly has been so strong here. Great word out of Google that they're not going to have to sell their engine. We'll get into that in a little bit. That's obviously pushing things higher. And so the AI play it's still on. And look at the semiconductor index. We've always talked about this being a leading indicator for stocks, that it shows strength in the economy. It's kind of flattening out here a little bit, right? I mean, let's not say everything's rosy, but I think you could probably watch this SMH to see where things break. If this breaks to another level higher, the market's probably going higher. If this breaks down, market's probably going to pull back after that.
Yeah, 100%. And of course, this is kind of taking its cues from NVIDIA, which is being, been such a big part of this Mag 7 index, been such a big part of the AI trade, which, I big believer in the AI trade, a big believer in what NVIDIA is doing to kind of help with the computing of that. But I think we need to start looking at, okay, now that we're buying all these chips, Brian, now that we're building up all these data centers, what's going to happen? But while that's happening, real quickly, yeah, of course, the 10 years coming down in a big way, closing in on some of the lowest levels of the year. We'll see. Obviously, this week's going to be a big mover here in this. We'll see what happens. I think that's why tech has been recently taking charge here. We're seeing some of the risk-on names liking the growth possibilities with these lower yields. But while we're getting to the bull case of the market, just real quickly, remember, there's not like just an easy path here. We're still in September, most volatile time of the year. A lot of these tech names, like these Mag 7 names, have valuations that are super high. Maybe Google's a little bit less so compared to some of the other ones. But NVIDIA has got a super high valuation, and it needs to hit quarter after quarter. It's been hitting quarter after quarter, but it's really, really hard to do when you have a valuation that high. The economy is slowing down. That is why the Fed's talking about cutting maybe 2 or 3 times this year. So that is something that we can't just forget or ignore in the middle of this. The August jobs number was not very good, just 22,000. That's like on the way towards like a negative month of job growth or jobs losses for a month. So, and the revisions have been pretty significant. So we just can't ignore the fact that the labor market looks pretty weak. And the inflation story is still there. We've talked about this for some time. We've seen in the past where we've seen inflation pick up for a period like we saw in 2022, 2023, picking up to 8% and then retreating back down to sub 4%, 3%, only to pick back up again after we take our foot off the pedal. Is that the story we're going to see in 2026? It's not a done deal that inflation is going to continue on to the Fed's target. So lots of risk still in the market.
Yeah, risk 2 and 3 to me is the most concerning, really. That's you got to kind of watch. So like an economic slowdown with inflation is that's 2022 all over again, right?
If you pile those on together and if they come to fruition while number one is the case, it's kind of like a story where the stock market has to get hit hard.
All right. Well, I mean, I'm overweight stocks though, Joe. So don't give me all the doom and gloom here. I mean, give me some reasons to own this market.
Okay, so we got AI, Brian. AI has been the story. It's been what everyone's talking about. Everyone just thinks, AI is NVIDIA selling chips. Like that's great. That's AI. NVIDIA is the AI company. Yeah, I mean, to some extent they are, but they are generating this self machine learning, this ability for these machines to get into this environment, make lots of computations very quickly, and have computers doing a lot of functions much greater than it's ever been so in the past. I mean, this has kind of always been the case where you've had these computers getting more powerful, giving them more autonomy, giving them more ability to do these functions. And now we're kind of at a point where it's getting to be so powerful we can look at them and say, wow, these things are doing incredible things just like a human can do, which is way past what a human can do. I think like the language models were very interesting and unique, and they were just amazing, like mind-blowing to a lot of people to see how quickly these computers can do these things. That's just really the very, very tip of the iceberg of what this AI is going to be able to do. And what it really is just, what really a LLM is, it is just a data management. It's just turning information into actionable insights. So, I mean, Palantir, of course, is a great example of this, but just using the data in a way which allows people to make decisions faster, cut costs, allows people to be better at their jobs. It just allows you to be able to utilize your resources faster and better. That's just for me, that's like the biggest thing that we're going to see AI do, and it's just going to be transformation. It just continues to be transformational. I guess we already know, and we know Google, Alphabet is of course a company at the center of all that. Now, another thing that of course Alphabet is doing is they are building quantum computers. They have some of the fastest quantum computer chips. I'm just excited about the potential for that. Now, that might be a few years down the road, but that is something that is just absolutely mind-boggling. The speed at which those computers can do their calculations, which is just going to take this just another like transformational leap as we go through these technologies. And of course, robotics, autonomous systems. We know about Waymo. We know about their driverless cars. There's just a whole bunch more of abilities that robots can do just in factories. It's really endless. And we're just at the very beginning of this still. So it's really exciting. And finally, genetic research is potentially the biggest of them all, Brian, just being able to the gene code that's in everybody's system is so complex, but being able to diagnose things or break that down very quickly using this vast computational power is going to just be revolutionary for biotech and pharmaceuticals altogether. So one company, of course, is at the center of all that, and that obviously is Google.
Yeah, and this is one of my favorites. Honestly, it's probably my biggest holding personally, and we really like it at Equity Armor. Obviously we trade two mutual funds. One is the Nasdaq 100, so we obviously have to buy Alphabet in there as it's a significant weighting in there, and the other is the Rational Equity Armor Fund, and that strategy that we employ for clients is one that's adaptable, but Alphabet is one that like we have to own, because you kind of mentioned like these 5 reasons of putting it all together to sort of stave off the 3 other bad reasons. Really the one headwind to this stock was, are they going to have to break the company up? Are they antitrust, all this and that? We obviously got some good news for the stock where they're not going to need to have to sell their browser, although that valuation was pretty lofty. So I think either way, that was going to be a win-win for them. But certainly we got that news, and now the stock probably has a lot of catching up to do to the rest of where AI is. Personally, that's what I think. Now there is this big, gap up move that it made. So could it, back and fill some of that, that caught people off sides? Yeah. But this thing is, I almost put that as like, I mean, doesn't that look like a nice big huge cup and handle double bottom over like a 1.5 year period, breakout above 200?
Absolutely was a massive breakout here at 200 for me.
Yeah.
But yeah, it's a beautiful cup here. You would almost just give it like a price target of 260.
Yeah.
Which is plays right into our trade, Brian, which I looked at this morning, just looking to I kind of view this as similar to a cash secured put, but it's just a way for me. Obviously, it's had a huge run up, and it's hard to just go out there and buy a company after it's had a huge run from breaking out of the 200 to where we are at 235, 236 this morning. So love the company, want to be in it for the long haul.
Joe, look at this graphic here, though. Just I assume you're not buying 2 upside calls. You're probably selling the 260 call instead.
Yes. Yeah.
So just to make that little change, I mean, when you look at this this sort of cash secured put, right? So I would want to keep $220, but one option contract's 100 shares, so $22,000 I'd have set aside in case I need to buy the stock at 220, and then by buying this call spread, I take the cash that I bring in from selling the put, I apply it to also buy the call spread, so I get further upside between 240 and 260, and then you can see here. This trade is trading for about even money. You actually collect 20 cents. So if nothing happens in the stock between 220 and 240, you collect 20 cents. And the risk is that I've got to buy the stock at 220, which I'm fine doing. And this might actually even be a very good extra leverage play, to be honest. If you already own the stock and you're a little behind the market, you still have equity in the markets, and you want to play a little catch up here, I think this trade makes a lot of sense. Because
you get the upside to 260 here in the name, and you don't have the downside all the way down to 220. So that's why I designed it like this. The trade-off is, of course, that we're out at 260, which is fine by me. I think that's a huge run up in a short period of time. We'll be flat Google again. I'll be flat Google again up above 260. So for me, that's how I want to do it. Not outlaying a bunch of cash, not outlaying a huge premium to be in this call, just picking a spot. If it pulls back, I want to own it. I don't lose any money on that pullback. If it goes higher, I want to own it. I'm not paying a bunch of money to do so. And that's just the trade-off here. I have to be in the name of 220. I have to be out of the name of 260.
Yeah. I mean, like I said, I think, 260 maybe is a little early to get called away on something like this, but that was kind of our target price, based on, some of the technicals. So that's, kind of why we set that strike there. And this is probably why I almost use this as like an extra leverage play on my account to get a little extra exposure. Remember, the stock's at 235 right now. So if you've got $15 cushion to the downside before you start losing money on this trade. So that's why I like it kind of as a leverage play, because I got a little extra cushion on the downside. I get maybe an extra, I basically make an extra almost 10% return on my money, right? From 240 to 260. That's a $20 profit for me on a $235 stock. So I like it. I like it a lot.
Yeah, I mean, there is a great chance this turns around here before going higher. So I mean, that's why it's just looking at this. I mean, this is just parabolic upside. It's, for me, it's just jumping out. I want to own it for the long term. I want to own it for the next 5 years. But we're going to see some chop in here. Pull back to 220, easy buy for me. Same token, we could very easily race right through to 260. If that happens, I'll just rinse and repeat, do a new trade like this next quarter.
All right, love it, Joe. That about does it for our show. Make sure you tune in on our new time slot here. You can have your lunch, sit here for half an hour, listen to our spiel on volatility of the markets and our trade idea every week here, Monday noon Eastern. We'll be bringing it to you. That about wraps it up. That's Brian Stutland here with my colleague Joe Teague at Equity Armor Investments. Go check us out, equityarmorinvestments.com, to see what we have to offer. Subscribe to the video. We'll catch you next week.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.